Hello guys, welcome to the Trading Parrot. We finally confirmed the breakout on the 4-hour and things are looking bullish for a potential additional upside. I want to give you the levels to look. I want to share invalidation points. I also want to give you my view on how different this period is from the previous cycles when it comes to Bitcoin and altcoin season and how we should be adapting our expectations for what's coming next. Make sure you make it to the end of the video because I have incredible news about the buy signal that triggered last night. I will do a full overview of the past performance of the signal. I'm going to explain how it works. Guys, if you like this type of content, make sure that you're subscribed to the channel. Hit the notification bell so you get notified every time I put out one of these videos. And guys, I really appreciate that you're putting a like in every single one of these videos, which is definitely helping the channel to continue growing. I got many comments from you guys encouraging me to continue doing good quality content that eventually the channel should grow and we should start seeing lots of additional views. I'm pretty sure that we are on the right side. Most of the channels are getting less views and we are going in the other direction. Every day we're getting more views, which is incredibly amazing. I'm super motivated. So much that I'm even recording videos on my holidays. Let's have a very quick look at daily time frame. What I have here is the fixed range volume profile, and you can see that move into 49k deviation below the range, which got recovered on the second day with this green candle with an move to the upside. That move made it above the point of control, and in terms of market structure, we could say that we have this low, high, and low. So the structure on the daily is still intact. What we need to do now is recover above the previous high that we printed on the 24th of August. By doing so, we can manage to get to the top of the megaphone pattern. And you might be wondering, why am I arbitrarily placing the volume profile like this? Just because I wanted to show you that the current range that we are seeing in the past 4 months has slipped slightly to the lower end of the megaphone pattern. If we were to extend this to the full period where we are inside the megaphone pattern, you're gonna see that we are trading below the range. Interestingly, if we do it like that, our point of control, instead of being at around 59k, it gets moved to 67k. That 67k, guys, is the level of largest liquidation in the closest proximity above the price. So the price needs to move all the way to here to grab a decent chunk of liquidity if we were to pump to the upside. To the downside, we have the 54k that we've been mentioning for quite a while. And of course, if things got really bearish, there's no surprises that below this week is where all the stop losses formed. This is because the people that are in a long in this area are still holding those stop losses in this lower range. And if things get bearish, they're going to start closing their positions, causing that this area of liquidity could attract the price. Notice as well that by seeing this chart on the daily time frame, the liquidations are way larger on the lower end compared to the top end, contrarian to what everybody's saying, that they are way more on the top end. Something I wanted to show you is the liquidation levels when we were reversing in the bear market and kicking off the actual bull market. You can see that the price action started getting bullish into the upside and we didn't necessarily take all the liquidity. My point is, every time that the price starts pumping, there's a compromise and the market maker lets these people get away with leaving their large stop losses in there using high leverage, and the price still manages to pump. In summary, we shouldn't take for granted that in order for the price to go high, must come and take all of this beforehand. In fact, the most bullish periods in the bull market, as I show you, we have to leave behind some liquidity not taken. Quick look at the RSI on the daily because we have some developments. As I explained yesterday, I was expecting this move in here to an RSI 40 to become a pivot. And that's just purely because this has been moving constantly down without managing to do almost any swing high. And what we have here is a bounce from the level of 57k where we were expecting to see many people getting liquidated. There was a liquidation pool there that I shared on Twitter. Make sure that you're following me. My handle is Trading Parrot. What I'm hoping to see in the upcoming days is possibly a move to test this low end in here and hopefully to print a high so we can get to higher levels of RSI on the daily, possibly getting to 55, 54 as I mentioned yesterday. Of course, all of that gets invalidated as soon as we break below this trend line, and that level of support comes from 41 RSI. So let's have a very quick look in the price. First of all, to the 41, which is our support. So very simple. If we get below 57 and 100K, we are breaking below support. So we cannot afford now to print a low because that will confirm our potential move to the downside. What we need to do is this candle that you can see is seeing a rejection on the daily, just like we saw on this candle in here. We need pretty much to see something very similar. We need to start putting highs and continue going higher than 60.5K, because in that area, as you can see, we have multiple rejections. The price, when it's in this area of 58 that we saw, it was the point of control. It really attracts the price to stay around there, and people tend to take shorts and take profits around this area. We now need to break above 61K and hold it. And if we start coming for a low, we need to hold at 57 and 100. Very simple. When it comes to the target of RSI 54, if now we come back to the target of RSI 54, 55, you can see that could take us to 61.7, and that wouldn't be crazy at all. You can see how many times in this range we go to those levels, so it's totally doable to get to the top of this triangle. Now going to the 4 hour, yesterday we were around here and we were talking about a potential breakout on the 4 hour. So far we have done pretty small progress, only at 2.5%. We did manage to get to the 59 area that I said it was a very conservative target, but we haven't managed to get to 61, and we are really far away from the first level of resistance of the CPR indicator for the month of September. What do we need to do now? Well, things are very simple. If we look at this trend line, obviously we do not want to come back into the range below the trend line. That is one strong argument. We do not want to break below the CPR pivots. So if we come back here, we should use them somehow as support, potentially to start going into higher prices. As I mentioned, we have an area of interest about 60K, which is a psychological resistance. We have some liquidity here at 63. 65 has obviously the order block from the time we started selling. And of course, we have 67, which I already mentioned, is the most significant level in between 70 and 50K. No updates when it comes to withdrawals and deposits. No sneaky whales starting to go crazy with deposits. Neither any long-term holder getting suddenly scared and starting to sell. Megaphone pattern still not broken in any way when it comes to being able to achieve the yellow paths. I want to give a quick update when it comes to altcoins before I talk about this buy signal, which you don't want to miss at the end of the video. Probably is the most important part. This area in here of Bitcoin season that starts from June into September, that has been pretty bad for the altcoins. If we go to 2020 to the equivalent area, we can see how different it is. From May, it was in a Bitcoin season that lasted very little, and then it went into Bitcoin season in August 2020. That is the equivalent period 4 years ago based on the halving event. And then around September, it had the crash of Bitcoin that caused the whole thing to go into October, November. In December was just purely Bitcoin season. But here's the problem. We are already in a Bitcoin season. And typically you enter Bitcoin season once you get a Bitcoin massive crash or there is a huge pump Bitcoin. But Bitcoin has already been constantly putting new lows. So my point is, I wouldn't necessarily expect things to play out in a similar way or similar timing compared to the previous cycle, just because we are already seeing lots of patterns being not respected, and even though there were rates being cut in here, the effect of that didn't necessarily follow the same steps. Unfortunately, in this chart, I cannot go to 2016, so I cannot compare it to 8 years in the past. And if you look at total free, this is the whole structure of the bull market. And you can tell how bad things have been from March into now. We've been pretty much reversed all the profits and gone back into the bottom of the channel. We are in a similar place as we were in June in 2023 or in December in 2022. I've been expecting since July to start going into the top of the range. Also at the end of July. More recently, end of August, we again for the third time, we tested this level of support. Of course, there can be some black swan event and we could break below this area and then hit it as resistance later on, causing some sort of pump coming from the altcoins, but after an actual big crash. Or we could respect this support and start doing what I've been hoping to see in the market for a long time. And I'm almost getting tired for so many months being looking at this ascending broadening wedge, hitting the levels of resistance in here, expecting it to potentially go slightly higher into maybe even 60%, but eventually it needs to start breaking down. We're getting very close to the interest rate cuts. And there are two groups of people. Some people are thinking that if they cut too much, it means that the economy really got broken and that we should be seeing the S&P entering into downtrend after this potential double top formation, and the Nasdaq, which is already in a weekly downtrend, potentially breaking below this trend line. Maybe one thing that could happen in September is that we see Bitcoin hitting some lows, maybe 50s, 48, 46. It's impossible to tell how low we could go in September. That could bring the Bitcoin dominance to hit a final top at 60%. And right after that, we could see an altcoin season coming in. If you look from far away, all the Bitcoin seasons that we see in this chart, we can see that this is becoming part of the group of Bitcoin seasons that lasted for longer. Only in 2019, we have one that is that long, and in 2023 as well. But many times we just come into Bitcoin season and we bounce back up into the middle of the range. At least one thing that we need to really prevent is to see the monthly stochastic RSI to enter below 20. Every time we do that, we enter a bear market. And right now we are at 50, so it will be a pretty healthy area to bounce back up. If September was to push us slightly lower, we need to continue monitoring that we don't close September with a stochastic RSI too close to 20, because that starts risking too much, and then we need to start talking about 73.5 having become the actual top of the bull market. You can tell that we are leaving very thin value gaps in here that are not that much of an incentive for the price. Of course, they're going to get taken, but I tend to look forward for the larger chunks. And the closest largest chunk that we have right now is above 61K, spanning all the way to 62.8, which is a good thing. If you ask me, not enough to trade by itself, but another checkbox to put towards a potential upside. We've been for 3 days in the fear area. In fact, 3 days in a row with a lecture of 26 points in the fear and greed index. Let's go and let's check the signal that triggered last night. People ask me once again, how does it work with this indicator? In fact, I place it in the daily time frame. This indicator works on high block capital, the ratio of longs versus shorts on Binance. People were getting excited on Twitter to hear that we have a potential buy signal incoming. And I mentioned that I really trust this indicator. I'm going to show you the past performance throughout the bull market. This is the end of the bear market here on my left-hand side. So I'm going to focus on the bull market. You can tell that every time that we exit a green area, it means that we are crossing below the level of 70. That is the ratio of longs versus shorts, meaning that longs are closing down their excessive positions, potentially because they're getting hit by a stop loss or an event of a liquidation, or they get just tired of waiting. But in this ranging period, for example, we get 1, 2, 3, 4, 5 signals. And right after the last one is when we start seeing all this green move from 25K into almost 31K. Once again, right after this dump, we go back into the range of the 26K. This is in August 2023, and we get all the signals in this area where you could have just DCA each one as it's triggering. Right after that, we get this impulsive move to 59 and we get some bearish price action around the 10th of January of 2024. At that point, we get a drawdown of 17% and we get one signal at this price at 40 and we get one signal at 43K followed by a signal at 39.2, which is the actual reversal that takes us into 73.5. So that is already very impressive to me. I don't know if you would like to trade those signals. Personally, I would have loved it. You got then another signal in here at 63.8 that takes you back into 72K. You get one signal in here that gives you another 10%, another signal in here, probably another 10%, and finally this one that takes you back into 71K. What happens after? You are into the green, loads of longs, and once you cross below 70, you get this signal. And you might say, oh, this is terrible. You're buying at 63. The way I evaluate these sort of strategies is not by 100% of accuracy, because if you aim for that, you're just going to get frustrated that nothing really gives you 100%. And if it does, in the past, probably it's going to give you too little signals. You're going to have to wait months and months and months and months to get just a single signal. So if you catch this 63K and then you get dumped into 53, yes, you get very frustrated. But you get another signal at 53 and you get another signal here at 56. So if you were executing this in a rigorous way, following some sort of plan that you can come up with, personally, I just DCA. I will probably buy 3-4% of my account in here, 5% in here, and then another 7% in there. Just because I like to increase as time goes by into this signal. Eventually, I could get a very nice average around 58K and then ride it all the way to 68K. As soon as I see weakness in here, I can take partial profits or I can just exit the market. At these tops, with very high levels of open interest, like in here, were perfect points to sell. So you can use complementary signals to rinse and repeat. The most recent signals, you got one that was pretty obvious right after the dump to 49K. Then you get a local bottom in here. And recently, if you were buying each of these individual levels, you're buying 3 times at the same price. So what I'm doing is I bought in here 59. I bought at 57, as I mentioned on Twitter. I got that as an average. And I'm going to skip the signal today because I already had at that average. If we go to 54, if we go to 46, I will add more and I'm sure we will get more signals from this to confirm them. And if we start going higher, I will just look for areas to take profit from my swing long. And guys, if you want to trade this or any other strategy, make sure that you have a look at this promotion I have exclusive on Bybit. I'm hosting a position airdrop, which means that if you trade with just $100 on Bybit, they're going to give you additional $500 to trade for free. You can trade any of the coins that are in this list. And in order to activate it, you have to click the top link in the description of this video. That's also going to show you the instructions. If you don't have a Bybit account, and even if you already have one, I encourage you to open one using my link in the description because you can unlock up to 30,000 in rewards. And by using my referral link as well and opening an account on my website, thetradingparrot.com, you do not have to pay any memberships if you connect your Bybit account to my website and you trade with Bybit. Thanks to all the views and all the likes that we are receiving recently, I'm progressing towards eventually making all free. And as a proof, in the past month, we reduced the price 33%. And I'm going to continue doing so the more likes and the more views that we get on YouTube. If you wonder what you get with a TTP account, you not only get over 100 of all the indicators that I have created to help me navigate the market myself and to do backtesting, building bots, but also you get very advanced tools to trade with bots, like for example the pair selection, signals to orchestrate your bots to switch them on and off. I encourage you to join my Discord server. Go straight into the strategy section. That area is open publicly. You can browse some example of strategies, example of bots. You can access for free the code of my RSI, the one I use in all my videos. You can copy some charts. Join the conversation with the community. I'll see you there. Take care. Bye-bye.